The worst inflation in decades is impacting nearly all aspects of people's financial lives, including retirement savings. You might have heard of the 4% rule. It's a strategy of withdrawing 4% of one's retirement fund yearly. It first became popular in the 90s. So Dan Geltrude joins us now to discuss why this strategy may be a little too aggressive for this economy. He is the founder of Geltrude and Company, an accounting and financial consulting firm in Nutley, New Jersey. Thanks for joining us. I got to admit, I had not heard of the 4% rule, probably because I'm in the saving phase of retirement and not the spending phase. But we're going to talk about that. How is inflation and a bear market impacting people's retirement savings?
Well, it's having a devastating effect because it's a 1-2 punch. What do we mean by that? Well, when we're talking about being in a bear market, the value of those investments are coming down. Punch one. Punch two is now you have inflation. So everything you're spending money on costs more. So now those retirees are really caught in a squeeze. And remember, the biggest fear that many retirees have is running out of money. And a bear market and inflation, well, that doesn't help financial anxiety at all.
Yeah, that can chew through your savings. Withdrawing 4% of retirement savings per year has been the standard for like 30 years. But should current retirees plan to spend maybe more conservatively these days?
I think so. Look, when you talk about the 4% rule, that kind of rule of thumb, what it basically says is that you use up 4% of what you've saved for retirement. So let's just say you have $1 million put away. So 4% of that is $40,000. And then each year thereafter, you would increase that by the increase in the inflation rate. But what's happening now is that you have inflation jumping. So there are variables that don't necessarily make that 4% rule applicable all the time. It's somewhat of a theory. It's a good guideline, but it doesn't always work.
Okay, so you're a retiree, you need to spend less money, but prices are going up. I mean, how do you do that?
Well, it's really tough for everyone, but especially retirees, because you really have to focus in on where you're spending money. And of course, you need to cut back. You need to have a budget. That's first and foremost. You need to make use of senior discounts when they're available. How about downsizing your living space? Or many people are relocating, we'll say, to greener pastures, meaning states with lower taxes or no taxes, and where the cost of living is lower. You may have to sell your vehicle, reevaluate your insurance policies, and last but not least, look at those high interest rates you may be paying, such as credit cards. Get rid of those.
Yeah, you know, the all really good advice. There are little places here and there, subscriptions that you don't even really need anymore that you can cancel. But I think, you know, some people are going to hear this and go, oh my gosh, I feel like I'm restrained now. Dan's telling me to restrain myself even more. But we're talking about sort of a moment in time that inflation is high now, but the hope is it will eventually go back down and then you can normalize your spending a bit, right?
Well, that's correct. Look, the problem is we don't exactly know when inflation is going to retract. You see, the Federal Reserve is raising interest rates, which isn't a great solution, but it is a path to try to get inflation down, because inflation is so insidious, you know, almost at all costs, you have to try to take it down. So certainly we're looking ahead, and at some point inflation will start to come down. We'll have things a little bit more normal, and then for retirees out there, you can once again open up that spending a little bit more.
Right. But for now, just be a little conservative. Dan Geltrude, thank you so much, Dan.
Thank you.